With massive layoffs in nearly every sector, weakness in manufacturing, car sales and housing, and the biggest one-month decline in the trade deficit since the financial crisis, the economic picture is not looking good, which might explain why so many billionaires are loading up on gold, including hedge fund manager John Paulson and real estate mogul Sam Zell. Bottom line, now is the time to own gold, which is why the experts at Stansberry Research just stepped forward with a major gold prediction, arguing gold could soar as high as $3,000 by the end of the year, possibly even higher. You can find out why and get instant access to their #1 gold investment today. It's not bullion, an ETF, or a mining stock, but in the past, this gold strategy could have made you nearly 50x your money. Considering how quickly the price of gold has been moving in recent weeks, you don't want to waste any time missing out on the gains these experts believe are in store for this gold stock. To get a copy of his new free report with all the details, simply go to goldmaniareport.com. Again, that's goldmaniareport.com for a free copy of his new report. Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show. So today I have brought back a fan favorite to really help us understand what is going on with all the news coming out with regards to central bank digital currencies. So please welcome back a fellow macroeconomic enthusiast, founder of Rebel Capitalist, and overall great guy, George Gammon. Always good to see you.
Thanks for having me back, Daniela. Always fun to talk.
Yeah, absolutely. Like I said, it's such a critical time. And I know we've been covering, and you have been doing so much research and work on central bank digital currencies for so long that I said, look, we have to have you on. Why now? Well, we see the headlines. At the recent IMF spring meeting, we see the Digital Currency Monetary Authority, DCMA, launching an international central bank digital currency, the Universal Monetary Unit, UMU. People are also calling it Unicoin. So I want to talk about that. I also want to talk about the program coming out of the Federal Reserve this July, FedNow. And the Federal Reserve has been very vocal and active on social media. They're obviously watching your channel, George, and my channel, answering questions, whether FedNow is replacing cash. Is it a CBDC? They're definitely not labeling it as central bank digital currency. So let's start with these two important and separate things that are happening. Let's start with FedNow and get your take of, is it something that is going to be a game changer? Is it overhyped? What's George Gammon's analysis of it?
I think it could be both. So the FedNow is just basically back-end plumbing. So right now we have a clearing mechanism. We have a settlement process between banks. And a lot of times they're settling on the Fed's balance sheet. And so what the Fed did is they just created a centralized version of that. So is FedNow a central bank digital currency? The answer is no, it is not. But it is back-end plumbing that could be used for a central bank digital currency in the future. And going back to your earlier point, what you're mentioning, I'd also like to highlight the fact that the BIS, the Bank of International Settlements, has also just announced one of their CBDC projects called Icebreaker.
That's right.
I just did a whiteboard video on that. So that's something that we see in process right now. It might happen in the future. We see these CBDC projects happening, not just in the United States, but we see this transition and this move and this push towards centralized money. And it goes back to that Henry Kissinger quote that he said something to the effect where if you control the food, you control the people. If you control the oil, you control regions. But if you control the money, you control the world.
And that's all valid points. And I'm happy you brought up Icebreaker. And I know one tweet of yours said, what all seemed like conspiracy theories once upon a time are all coming to fruition.
Yeah.
But I guess why now? Like, why the push now for central bank digital currencies? What is it in the air that it's all happening now?
Yeah, I mean, I think they've got an easy pitch moving forward, especially if we continue to have problems in the banking system. So you can imagine, and let's back up a little bit.
Yeah.
I don't think they're going to come out and announce that they've got a Fed coin or a central bank digital currency. I think maybe outside the United States they're a little more receptive to that. I think inside the United States, it just has too much negative publicity around it.
Right.
So if they want to implement these Orwellian policies that they would have with a central bank digital currency, really the move and what we have to be on the watch for is them taking the deposits from the commercial banking system and moving them onto the Fed's balance sheet, because that's absolutely crucial that they do that in order to have this 1984 type of control, and in order to know what you're spending money on, in order to give you a social score, in order to basically have individual monetary policy, in order to micromanage interest rates, and in order to really have take that social score and have a mechanism to enforce what they want to enforce. So we all are worried about, okay, well, if you're buying too much diesel, that's going to impact your social score. So they're going to limit your ability to buy diesel, or they're going to charge you a higher interest rate. None of that stuff is possible unless those deposits go from the commercial banking system to the Fed's balance sheet. So that's what we really need to focus on. And you've seen like Ron DeSantis and you've seen Ted Cruz come out with these policies that, that they're saying, well, we're going to make a central bank digital currency illegal.
Yeah.
And I applaud them for bringing this to the attention of the general public. But in doing so, they're kind of perpetuating this myth that a central bank digital currency is something that competes with the dollar. You know, it's like a Fed coin. So you're going to have to choose whether you want to use Fed coin or you want to use your current dollars. And I think that's a dangerous misrepresentation. And the reason I think that's dangerous is because if people believe that it's a completely separate currency, instead of just the simple fact that your dollars are now a liability of the Federal Reserve, they'll be hyper-focused on a central bank digital currency, and the Fed will come out, or the central planners, and say, oh, listen, with this banking crisis, why on earth would you keep your money at a bank? Why would you keep your money at Wells Fargo, Danielle? It doesn't even make sense, because you've got this business, or even if it's your personal account, now you risk taking a haircut. So why don't we just take all these dollar deposits and move them onto the Fed's balance sheet, because the Fed is the one bank that can't go bust. And then you don't have to worry about this. These bank runs should be something of the past. And then all these people that are so adamant against a central bank digital currency are going to see this crisis situation, say, I don't want to take a haircut on my deposits. And then they sit there and say, they give this sales pitch, right, the central planners, and say, in addition to never having to worry about taking a haircut, we don't have to worry about FDIC.
Right.
And in addition to that, we can pay you the exact same interest rate that we're paying Jamie Dimon. And what I mean by that is JP Morgan's account is already at the Fed, and they're getting interest on reserves, which is Fed funds, at roughly 5%, where the average Joe and Jane is barely getting 50 basis points in their checking account.
And look at the
so you see how the pitch is very easy.
Yeah, and it's also interesting the timing that Jamie Dimon has come out saying the repercussions from the banking crisis will be felt for years to come.
Yeah, exactly. So that's, I think, the pitch that you're going to hear from the central planners. And my point is I'm concerned that the average Joe and Jane will be so hyper-focused on FedCoin, looking over here. Yeah. And when they come out with this sales pitch, they'll be like, oh, yeah, take my account from Wells Fargo to the Fed. Yeah, why not? But as long as you don't do a central bank digital currency, and then 6 months later, the average Joe is going to be like, wait a minute, why do I have this social score all of a sudden? They haven't implemented FedCoin, you see, and they do it right under the consumer's nose. They don't even know about it because they don't realize that a central bank digital currency isn't some new FedCoin. It's just simply having your dollars as a liability of the Federal Reserve.
And to your point about how we have the plumbing in place, but how far out are we from the infrastructure? I mean, it sounds like we're years away then, or am I wrong?
Well, I think it depends on how this next crisis plays out. So we all know right now, because we've been watching the yield curve, that the smart money is predicting an economic recession, if not worse, potentially a global economic depression. So who knows what the black swan event will be. But if the stock market goes down by, let's say, 50%, they're going to do the exact same thing that they did during COVID. And they're going to drop interest rates to zero. They're going to do quantitative easing, and they're going to do all these things that they probably haven't done before. Remember, during COVID, they started buying corporate debt through a special purpose vehicle, and they had never done that before. So I assume that in this next crisis, they're going to do other tools. They're going to have more facilities, and that might include taking those deposits from the commercial banking system that is incredibly fragile and moving them over to the central bank. Now, to answer your question specifically, I don't know how long that takes. I don't know how much of the back end plumbing they've already implemented.
Yeah.
But I think the bigger the crisis, the faster they're going to implement that, what we know a central bank digital currency to be.
So people knew you were coming on the show and saying, I had to ask you about the IMF spring meeting and the release of this unicoin now. Can you fill us in on how important this story is to follow? How does it affect our day-to-day life?
Well, what I do is I usually step back and take a look at the macro picture. And I've been talking about this stuff since 2019 when I started my YouTube channel. Back then, of course, everyone's calling you a tinfoil hatter and a conspiracy theorist. But now all of a sudden we see the conspiracy theory is becoming conspiracy fact. But going back to what I was saying there, if you step back and look at it from a 30,000-foot level, we know what the game plan is. And that's for the IMF to set up a digital SDR. So they're going to have their own CBDC, if you will, and that's going to be the digital reserve asset for the central banks themselves. And if you look into Icebreaker, this is exactly what it's all about. So what the central planners and the authoritarians want is to have each region or each country to have their own central bank digital currency, which would mean all of the entities in the real economy now have an account at their local central bank. And then they would want that settlement reserve asset to come from the ultimate centrally planned bank, and that would be the IMF. So instead of holding gold on their balance sheet as a reserve asset, the Federal Reserve, as an example, would hold digital SDRs.
Whoa.
And
okay.
that would allow them to make those transfer payments across borders much, much easier and much more efficient, but also it would give them all of that control that would allow them to micromanage the global monetary system. So my point is that's the direction that it's going, right? And that's what people need to be concerned with. It's all about IMF, digital SDR, and that is the reserve asset for the individual central banks that have their own local central bank digital currency, which means all of the entities have an account with that local central bank.
So then so there's no connection then as to why central banks have been buying gold at record amounts?
Oh, I don't know that there's a direct connection there. I think they're buying gold in record amounts because of the sanctions on Russia. And if you're a central bank, I mean, what would you do? Do you want your assets to be a liability of the United States government? I don't. So I would buy some form of asset that didn't have any counterparty risk. And I think we saw Russia do this back in 2014. That's when they really started to dump dollars or dump treasuries and really start to load up on gold. I think the PBOC is doing the exact same thing, whether they admit it or not. And now you're seeing all of these other central banks follow suit. But I don't know if it's good or bad, but I can't blame them.
Let me ask you this, if you can help us connect the dots here, because these are really interesting times, and I know I'm stating the obvious here, but here we have a banking crisis. We have all these pilot projects of central bank digital currencies rolling out. We have talk of de-dollarization. We have, Russia trying to lead a movement of getting the BRICS on a currency that would be a competitor to the US dollar. I mean, can you help us tie these three major events together? And what interested me most is central bank digital currencies happening at the same time as, a threat to the US dollar.
Yeah, that's a very detailed and complex question because I think that we can have significant consumer
Yeah.
price inflation in the United States because of an increase in the amount of currency units chasing goods and services, while at the same time, the dollar against other currencies can continue to go up, you see? And so tying that into a central bank digital currency, what we've been talking about, Daniela, is just the retail version of a CBDC, but there's also a wholesale version. So I don't want to get too far into the weeds, but I believe that the global monetary system has been broken since 2008. And the central planners know, obviously, the dollar is the reserve currency. It's 60, 70% of global settlement. But they also know that that's not in their control, that that's in the control of the banks and the Eurodollar system. And if those banks are failing, or if those banks aren't doing their job because they see too much counterparty risk, then how do they centralize that process? And the only way to do that is to implement a wholesale CBDC. So what I'm saying is that you've got this two-pronged approach. Number one, you use it for the average Joe and Jane to control their money, but then you also want to take control over the global supply of money, and that means taking the power away from the Eurodollar system and moving that onto the central bank's balance sheet. So, why that is important for the dollar is because if those banks in the Eurodollar system are creating fewer and fewer dollars, that's going to create a global economic crisis, a global economic depression, and that's where the dollar most likely loses significant value against goods and services in the United States while gaining value, which would be a big, big problem, because then instead of having businesses default, you're having whole countries default because of the amount of dollar-denominated debt. You see, and I think they believe that the solution for that is just the exact same solution that would be domestically, that if you have Silicon Valley Bank go bust, if you have Signature, then let's just move everything to the central bank's balance sheet. But if you have the global economy basically going bust, you have countries going bust because they're dependent on this banking system and the dollar, well, let's just get rid of that and let's just move that onto the central bank's balance sheet as well, because that is infinite. It can have negative equity, and those banks can't go bust. So you get into this weird world that from a wholesale standpoint, a retail standpoint, we're moving into communist Russia, where there's only one bank, and that's it.
That's exactly how it feels like. And I realize it was a big question, and I appreciate that answer tremendously, George. Something you're also tracking closely, and I want to bring up, I know we were offline, we were talking about money supply, and you haven't seen a downtrend like this since the Great Depression. Talk to us about what the Fed is going to do next. We're speaking ahead of a very critical May meeting here, George.
Yeah, I think they're probably going to continue to raise rates, maybe another 25 basis points or so, but the market's a lot smarter than I am. And the market is predicting that by the end of this year, the Fed's going to lower by at least 100 basis points. So what that means is that the market is predicting a very hard landing. They're seeing this soft landing is just complete nonsense. And one of the reasons might be because of this fragility that we're seeing in the banking system, they're lending a lot less, which makes sense. If you're Silicon Valley Bank, if you're a bank, you see all these regionals go bust, you see Credit Suisse, are you going to want to lend more or less? So the fact that they're tightening their belt, if you will, and they're reducing their exposure to risk means that the amount of deposits lately have been going down. The actual money supply that we have in the United States has been contracting. And I know it sounds very counterintuitive based on what we saw in 2020 and 2021.
Exactly.
Where it increased by 25%. But if you look over the year-on-year numbers, and I just did a whiteboard video on this, the money supply has gone down by 5%. So
But this is what the Fed wanted. That's what they wanted, no, George? This is exactly what they wanted.
Well, you got to be careful what you wish for. Because if we have an economy that is built around financial assets and you have lower velocity plus lower currency unit or a reduced amount of currency units, then you're going to most likely see those asset prices come down and come down very, very quickly. You also have to remember that one man's spending is another man's income. You see, And so if you have this contraction in the money supply, if we see that continue, then what would happen is you go into potentially a 1930s type of Great Depression, because that's really what happened there. The money supply contracted by like 20 or 30%. And that caused all of these bank failures, business failures. That went back to a reduction in bank lending, which is exactly what we're seeing right now. Those deposits are just merely a derivative of bank lending. So, the punchline there is the central planners will most likely have to come back in and do more of what they did during COVID, but to a greater degree, which takes us right back into the next wave of consumer price inflation. But I think that we get disinflation and possibly even deflation, believe it or not, for maybe a quarter before they come back in with their policies and their tools that will take us to that next wave. And this is why I think that the 2020s will look very similar to the 1940s. In 1947, the CPI was over 19%, Daniela, and 2 years later, it got all the way down to -2. So we go from 19% inflation to 2% deflation, and then we had another wave that went right back up to 12% inflation. And so I would not be surprised if we peaked out a couple months ago, or maybe 6 months ago or so, at 9% here in the United States. And at the Q4 of 2023, we go to a point where we're in actual deflation, say -2, -3, maybe even -4. But then in 2024 or into 25, we get that next leg up where the CPI doesn't go to 9%, but goes to maybe 15 or even 20%, like we saw in the 1940s.
Yep.
And we just ride this roller coaster throughout the rest of the decade.
Right. And you have always said that it's wrong to think that it's just one way up when we're looking at CPI. It's absolutely not. And to your point about lessons not being learned, I mean, the World Economic Forum just put out their outlook saying that globally, central banks will all have to, stop raising rates and just replace us back in the mess where it all started.
I think that goes back to your point there, George. Because in the 1940s, one of the things that caused that big spike was price controls. So I know I'm not talking about the rest of 2023. Now I'm talking about into 2025. That's another thing that people should look out for, because I think that in this next wave of consumer price inflation after the disinflation or deflation, the central planners will come out and say, okay, well, we've got to raise rates again, but we don't want to impact the unemployment rate. We got to get rid of that Phillips curve thing. We want unemployment to stay very, very low. And the Keynesians will sit back and say, well, you can't do that or else we're going to have consumer price inflation. But then they come in and say, well, we've got the solution. We're going to keep interest rates very low to make sure unemployment stays low. But to combat inflation, instead of raising rates, we're just going to put in price controls. And that's exactly what they did in the 1940s. And that's exactly what I am predicting, or my base case for what we'll see in maybe 2025 or 2026.
You have just given us a gift of information, of a tremendous amount of information here. If I could put a bow on it to wrap it up.
Here, one thing
that I was thinking.
One thing, sorry for cutting you off there, but one thing I'd like people to realize, and this is some good news, is that currently a central bank digital currency is illegal in the United States. And this is per the Fed. So per the Federal Reserve Act, the Fed is not allowed to do business with individuals. So the good news is, as long as individuals that value freedom, liberty, and free market capitalism, your audience and my audience, as long as they come together and make sure that the central planners don't change that law or break that law, then we dramatically reduce the probability that we go into this Orwellian nightmare.
Well, this is a huge nugget of information you've just given us, George. I mean, let me ask you this. How would it be easy to reverse that law? Is it just, a stroke of a pen, or
they just ignore it? I mean, let's be honest. They completely ignored the Federal Reserve Act in 2020 when they started buying corporate debt through those special purpose vehicles. So I don't see why they wouldn't do that in the future if we allow them to. If we allow them to.
Mm-hmm.
But we can see, I mean, let's go back. We were talking about Canada before we hit the record button. And, you guys had the trucker movement. And I truly believe that if it wasn't for Russia invading Ukraine, because that took the whole emphasis off the trucker movement in like a matter of 3 days. If it wasn't for that, I think that trucker movement would have completely changed the world, not just Canada, because you saw those things springing up in New Zealand, in the United States, throughout Europe. And so that just goes to show you the power that we, the people, have if we come together as a unit and push back against the central planners and the authoritarians. And that's exactly what we need to do with the Federal Reserve Act. We need to make sure that we come together and we don't allow them to ignore the law that's already in place or change or break that law.
It's interesting. I guess that law was enacted in a time when the thought of a digital currency, didn't even cross anyone's mind.
Yeah.
Right. It would be interesting to be back in that time. George, I guess, like I said, you've given us this wealth of information. And one thing that I was thinking during the interview is when the whole banking crisis was unfolding, did it change anything for you? I know you've been preparing for this exact moment for years. You've warned us about, heading into some sort of zombie apocalypse. But did it change anything for you? Any day-to-day things you're doing or your active involvement in the banking system, just general?
No, it actually just confirmed what my prior strategy. And so before, when people would ask me on my YouTube channel, they'd say, listen, I'm very concerned about the banking system. I have over $250,000 in my account. What should I do? What should I do? And I say, listen, you got to just go into T-bills. And I have a model portfolio for my account with Rebel Capitalist Pro. And that's exactly what I did there is I had 10% allocated to gold. That's what I always do because that's my insurance policy. And recently, I've just taken the cash balance, the dry powder, if you will, and just put that into T-bills. Why? Even though it's under the 250 balance, it's a $100,000 portfolio. It's just to show people the concept of having less counterparty risk with your dry powder. Because most people's dry powder, they've got a counterparty as Wells Fargo or B of A. And we know from watching Silicon Valley Bank and Credit Suisse that you're taking a significant amount of risk there. But if you can take that counterparty risk from the banking system and move it over just to the Janet Yellen and the Treasury, I don't like that. I don't like lending the government money. But in today's day and age, I think that's the best way that you can reduce your risk and take advantage of this crisis that is most likely headed in our direction. I mean, that's another point of good news here, is that the bigger the crisis, the bigger the opportunity. And I truly believe that going into 2024 or 2025, when we're on the back end of whatever is coming our way, that you're going to be able to buy stuff very, very cheap and stuff that you're going to want to hold for the next 10, maybe even 15 years. So what is that cheap stuff that I'm looking to buy with all the dry powder that I'm holding in T-bills? That'd be commodities. That would be gold miners. That would be oil. That would be coal. That would be iron. That would be copper. That would be uranium. And right now, they might be a little expensive, but that's the good news with economic depression, if we get it, is those commodity prices come down. That's when you take your dry powder, buy it on the cheap, and then ride it all the way up.
So you prefer the gold miners over physical gold? Or both?
It depends on what role in my portfolio they're playing. So I always separate my portfolio into 10, 80, 10. So 10% gold, physical gold, that's just insurance. 80% investments, stuff that pays me to own it. 10% speculative assets, which mean they might not pay me, but there's good asymmetry. And that's where the gold miners would sit. And so I think that, if you look at the GFC, if you look at COVID, you see that gold actually comes down a bit. So did Bitcoin lately or during COVID, because that's the only thing that is liquid. That's the only thing that these huge pension funds, that's the only thing they can sell. So that being said, you get that dip in the price, and that's when I would be, that's when I'd back up the Brinks truck with the gold miners, especially, assuming that their price came down and assuming that plays out. But even if it doesn't, I think it might be wise to nibble a little bit right now because of the delta between the actual gold price and the gold miners. I know that the gold miners are very depressed relative to the gold price, and that's interesting.
Yes. George Gammon, if you can't get enough of George and you want to see him live, guess what? You can. May 12th to the 14th. He's hosting his Rebel Capitalist live show in Orlando, and you have a lot of great speakers there, right, George?
Oh, yeah. We got people that you interview all the time. We got Peter Schiff, Mike Maloney, Lynn Alden, Brent Johnson, Jeff Snyder, just name a few.
Yeah, I'm sure it will be awesome. Wish you luck with that and urge everyone to go if you can. See George live. I can't wait to finally meet you in person one day, George. But in the meantime, thank you so much for joining me. It's just always a tremendous conversation with you, and I appreciate it. Thank you.
Thank you for having me.
And thank you all for watching. We will have much more great content coming your way, so be sure to stay tuned to the Daniela Cambone Show and sign up at danielacambone.com to stay on top of it all. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.